we believe that likely, and this is more really my personal belief, that Bitcoin really, if we look at the short term, will end this year somewhere between 50 and 100K. It's hard to tell. Next year, likely getting close to 200K potentially at the high end. Otherwise, most certainly somewhere in the 125 to 150 range. I think all of the longer term indicators are that the price will go up. The question is by how much and how fast, and will there be profit taking and drops along the way.
As Bitcoin enthusiasts eagerly await the upcoming halving event expected this April, anticipation is high for a post-halving boom. Marathon Digital Holdings CEO Fred Thiel has recently shared his bullish outlook on Bitcoin's price trajectory in 2024, particularly after the upcoming halving. He believes that Bitcoin will undergo a massive supply shock following the halving, further amplifying the shock already caused by the Bitcoin ETFs. Thiel credits the recent remarkable surge in Bitcoin's value to the massive demand caused by these ETFs, suggesting that this demand has effectively accelerated the usual Bitcoin cycle by approximately 6 months, thus shaping an exceptional cycle for the cryptocurrency market. Let us now view clips of Fred Thiel's latest interview as he reveals his bullish insights and analyses. Be sure to stay through the end of the video where Thiel explains why a supply shock is bound to happen, driving Bitcoin's price to new heights. While watching, kindly give this video a like, subscribe to the channel, and turn on post notifications for more similar content. Thank you, and enjoy.
If you think that Bitcoin historically has increased in value anywhere from 20 to 35% a year, kind of on average over the period of time, then, at 70,000 today going forward to 2030, you're looking at 6 years. Yeah, 30% a year appreciation, that's totally doable. And then it's a question of, does the cycle repeat and you have a bit of a bear market, or are we done with historical cycles, and because of the ETFs and longer holding institutional interest in Bitcoin, do we start seeing less volatility, which also means potentially less price appreciation on a long-term basis, other than that driven by pure supply and demand. Again, most people think of Bitcoin and compare it to gold or other commodities. The key difference between Bitcoin and gold is that there's a finite supply. There's only 21 million Bitcoin. Arguably 4 million of that 21 million have been lost, and we still have yet to mine about 1 million of it. So you're talking about potentially 16 million Bitcoin that could be tradable on any given moment. Most Bitcoin sits off exchanges in cold wallets, hasn't moved in 6 to 9 months. Over half of Bitcoin hasn't moved in 5 years, all of which says at some price point that Bitcoin will move, of course. But I believe that with the finite amount, if you start seeing, 1% of 401k assets beginning to be allocated to this type of an asset class over the next, say, 5 to 10 years, there's not enough supply to provide that level of investment in Bitcoin without the price going up significantly. So I think all of the longer term indicators are that the price will go up. The question is by how much and how fast, and will there be profit taking and drops along the way. The one thing I think that is certain is, while longer term volatility will decrease in the short term because of the amount of Bitcoin that's not on exchanges and the time it takes to get Bitcoin to exchanges from off-chain wallets, we'll see a lot of volatility in the price. Swings of 10% in a day will be normal fodder, I think. You have to look at what money it is that is going into Bitcoin that is creating the demand. So you have normal demand, that is, if the markets are moving towards a risk-on bias, then you're going to start seeing more capital allocated to higher risk assets, which would obviously benefit Bitcoin. That doesn't necessarily mean that the equity markets are going up at the same time. You can look at the macroeconomic situation today, and what you're seeing is one where you have persistent inflation pressures, you have persistent geopolitical pressures, and let's just say exogenous events that are causing some of that inflation to remain very sticky. Geopolitical situation in the Suez area, that's creating shipping challenges. You now also have the Port of Baltimore issues, which is another exogenous event that's going to create some form of impact on the inflation side. While you're starting to see unemployment tick up, many industries, especially on the services side, still haven't seen the downtick in employment. Manufacturing has seen it. So I think that we're either going to go into a recessionary period, in which case people may decide to put actually more money into assets like Bitcoin, which tend to be anti-inflationary and maintain value. But at the same time, there'll be less risk assets available. So it's going to be very interesting to see how Bitcoin behaves, because it acts a little bit like a chameleon, or a leopard rather, in that it changes its spots. If you go back to during the period of COVID and all those subsidies, there was a lot of money. People bought a lot of Bitcoin, things like that, stocks, etc. Then we had the drop in Bitcoin, and then all of a sudden Bitcoin started acting like an inflation hedge again. So Bitcoin changes its meme, if you would, and its bias a little bit depending on the types of investors who are buying or selling Bitcoin at any given moment. And I think what we're going to continue to see is Bitcoin have more pressure to move price upwards than to move price downwards in the near term.
Thiel also discusses the impact of the halving event on Bitcoin mining firms. Bitcoin miners receive rewards for verifying transactions, but these rewards decrease by half approximately every 4 years. This reduction requires Bitcoin prices to double to maintain miners' profitability. However, this adjustment doesn't happen immediately. It takes time for the market to react to the reduced supply. Some miners may continue operating at a loss until prices improve, while others may suspend mining operations until market conditions become favorable again. These factors will influence Bitcoin prices both positively and negatively in the coming months. Despite these challenges, there's a general optimism about the future of Bitcoin. Let us now return to the interview as Thiel explains these important points.
To produce a Bitcoin, if today it costs you, I'll use $20,000 as a round number, to produce Bitcoin, then, and that is your cost of energy to produce Bitcoin, then your cost to produce a Bitcoin post-halving would be $40,000 notionally. There are some slight differences. Your operating expense that is non-energy related relative to mining Bitcoin, it does not double. That cost doesn't double. It just takes twice as much compute to generate the same number of Bitcoin. And so what ends up happening is essentially, if you have 10% of the Bitcoin network in your mining fleet, the capacity of the Bitcoin network, then instead of producing 90 Bitcoin a day, you're going to get 450 Bitcoin a day. But the amount of energy you're expending is going to cost you the exact same. So that 45 Bitcoin will cost you what 90 Bitcoin cost to produce before the halving. Well, I think you need to look at the supply shock. Right now, we have a demand shock because of the ETFs. That's what's been driving price up. As you get to, and that's a demand shock to the tune of about 2,000 Bitcoin a day. If you look at the halving, we're going to go from having 900 newly minted Bitcoin a day to 450 a day. So you're taking the total new emissions of Bitcoin, if you would, the total supply that is being newly introduced on a daily basis will go down by 50%. We'll go to 450 Bitcoin. In a day when typically 4,000 to 5,000 Bitcoin are trading hands, a decrease of 450 in new supply will likely have some impact on price, though it's hard to determine what it might be. So there's going to be a small supply shock. It's not a big supply shock. It's a small supply shock, but it's still 10 to 15% of typically the liquidity in the marketplace. And again, these halving events will have less impact on the price of Bitcoin over time as liquidity in the market for Bitcoin increases. So if 10,000, 15,000, 20,000 Bitcoin are trading hands a day, then that's very different than if only a couple thousand Bitcoin are changing a day, right? So it's very likely that what we'll see is there'll be some upwards pricing pressure on Bitcoin post-halving. And again, as I said earlier, when we were talking about price predictions, likely we'll end this year above the former all-time high. And then we'll see another run up likely in 2025 as more adoption happens. But it's really the cycle post the peak, so post the next year peak, that will be different going forward. And that's something it's hard to tell because it's a question of institutional demand for Bitcoin. And how's that going to change? Will adoption continue at this current pace, in which case there will continue to be a deficit in available Bitcoin in the marketplace? So there'll be a continued demand shock, so price will go up. There'll be scarcity. In the event all of a sudden there is some major event that causes the price of Bitcoin to drop, you may see a supply glut, in which case you may see price decrement quickly. I think we're in unknown territory, and everybody is, I think many people are betting on the long term that yes, it's going to go up, so I'll keep investing. But people are kind of keeping their fingers crossed that something doesn't dramatically change negatively while they're making these investments. We're very optimistic about longer term opportunities with Bitcoin, and obviously what we're doing and how we're investing. And I think the rest of the industry is on a very similar track.
In other news, Bitcoin experienced a rally in March, reaching a new intraday all-time high of $73,750, but spent the latter half of the month trading between $60,000 and $72,000, ultimately closing at $70,849, marking a 14% monthly gain. Ethereum also saw gains, closing at $3,611, up by 5.8%. Among the top 10 cryptocurrencies by market capitalization, Dogecoin surged the most with a 133.8% gain, while Cardano had the lowest gain at 5.5%. The bullish trend in the crypto market continues into 2024, with Bitcoin up 64.9% year-to-date and Ethereum up by 55.6%. With this, investors are anticipating great returns this cycle. Considering the potential supply shock and accelerated Bitcoin cycle, what are your predictions for Bitcoin's price in the near term? Feel free to drop your thoughts and analyses in the comments below. If you found today's video enlightening and want to stay ahead with more insights and updates on crypto and global finance, make sure to hit the like button, subscribe to our channel, and turn on post notifications. Your support greatly encourages us to continue providing in-depth content and discussions. Stay tuned for our next episode, where we'll uncover more about the fascinating developments in the cryptocurrency space. Until then, keep questioning, keep exploring, and most importantly, keep investing wisely. Thank you for watching, and we'll see you in the next video.